the single person childcare tax credit. This video represents an update as published on the 22nd of May 2026 to the Tax and Duty Manual Part 15/01/41, the single person's childcare tax credit. The manual has been updated as follows. Paragraph 1 has been amended to remove a reference to one parent family tax credit, which has not been available since 2013. References to the year 2026 have replaced references to earlier tax years. The table in paragraph 1 has been updated to include the increased value of the tax credit for 2025 and 2026. Guidance on relinquishing a claim have been updated in paragraph 5. References to entering a civil partnership have been removed as couples can no longer enter into a civil partnership in Ireland. Various minor corrections and rewordings have also been made to the manual. This is Pádraig here at Boyle Payroll Project Management, Ireland's premier payroll providers for small businesses and first choice tax agents for PAYE workers to claim tax credits and complete their income tax returns, and many more services. Much of the detail in this video guide is information provided courtesy of the Revenue Commissioners under a Creative Commons Attribution 4.0 International CC by 4.0 license. Paragraph 1. Introduction. The Single Person Child Care Credit SPCCC is provided for in Section 46(2)(b) of the Taxes Consolidation Act, TCA 1997. The SPCCC is available where a person has a qualifying child resident with him or her for the whole or greater part of the year of assessment, and other conditions of the relief are also satisfied. The credit is granted in the first instance to the primary claimant, who may, if he or she so wishes, relinquish it for the year of assessment to a secondary claimant. The value of the credit for 2026 and subsequent years is €1,900. In addition, a claimant is also entitled to an additional €4,000 on the standard rate band. That is the amount of which tax is paid at the lower rate of tax, which is currently 20%. Further details on the standard rate band for 2026 and prior years are available on the Revenue website. Overview of the SPCCC for 2026 and prior years. Year 2026, €1,900. 2025, €1,900. 2024, €1,750. 2023, €1,650. And 2022, €1,650. Paragraph 2.1. What is a qualifying child? A qualifying child is a child 1. Who is born in the year of assessment, or 2. Who at the commencement of the year of assessment is under 18 years of age, or 3. Who is over 18 years of age at the commencement of the year of assessment, is receiving full-time instruction at any university, college, school or other educational establishment, or is permanently incapacitated by reason of mental or physical infirmity from maintaining himself or herself, and had become so permanently incapacitated before he or she reached 21 years of age, or had become permanently incapacitated after reaching 21 years of age, but while in receipt of full-time instruction at a university, college, school or other educational establishment. The qualifying child must be either the individual's own child or a child who is in the custody of the individual and who is maintained by that individual at his or her own expense for the whole or greater part of the tax year. Where the qualifying child was born in the tax year and is in the custody of an individual who is not the child's parent, the individual must maintain the child for the greater part of the period remaining in that year from the date when the child was born. Paragraph 2.2. Meaning of custody. For the purposes of this credit, custody of a child means having day-to-day responsibility for the upbringing of that child and responsibility for his or her charge and care. Custody differs from the concept of guardianship, where an individual who does not have regular contact with the child may have the power to make significant decisions that affect the child, such as where he or she is educated or whether medical procedures are undertaken or not. Paragraph 2.3. Child in care. A child who is in foster care cannot be the subject of a claim by a foster parent, as the cost of maintaining that child is met by the HSE. Children in residential care programs are similarly maintained by the HSE and likewise cannot be the subject of a claim. Paragraph 3. Requirements for all claimants. To qualify for the SPCCC, an individual must be 1. Single. 2. Widowed or a surviving a civil partner. 3. Married or in a civil partnership but separated or living separately. 4. Divorced. Or 5. A former civil partner in a civil partnership that has been dissolved. The SPCCC will not be due to an individual: 1. Who is jointly assessed for tax purposes. 2. Who is living with his or her spouse or civil partner. 3. Whose spouse or civil partner died in the tax year. Or 4. Who is cohabiting. Paragraph 4. Primary claimant. A primary claimant is the individual who proves for a tax year that a qualifying child is resident with him or her for the whole or the greater part of that year of assessment, that is, a period greater than 6 months. In respect of a child born in the year of assessment, the child must reside with the claimant for the greater part of the period remaining in that year of assessment from the date the child was born. Where a child is the subject of a court order made under Section 11 of the Guardianship of Infants Act 1964, granting joint custody to the child's father and mother, and the child resides with each parent for an equal part of the year of assessment, the primary claimant is the parent who is in receipt of child benefit in respect of that child from the Department of Social Protection. It should be noted that the purpose of this rule is to provide a tiebreaker in the unusual situation where a child resides with each parent for an equal amount of time. The fact that a joint custody order is in force is of no other relevance to a claim in respect of this credit. In particular, it does not mean that the credit can be apportioned or that both parties can claim it. A primary claimant is entitled to only one credit, irrespective of the number of qualifying children residing with him or her. Paragraph 5. A primary claimant may relinquish the credit so that it can be claimed by a secondary claimant. This might arise, for example, where the primary claimant has insufficient or no tax liability against which to offset the credit. It should be noted that there is no obligation on a primary claimant to relinquish the credit, even in circumstances where he or she is not utilising it. A primary claimant can give up his or her claim to the credit by completing sections A, B and C of Form SPCCC1 and submitting it to Revenue via my account using my inquiries. The credit will then be available to be claimed by a secondary claimant. As a claimant is only entitled to one credit regardless of the number of qualifying children residing with him or her, a primary claimant cannot relinquish his or her claim to the SPC to make it available for claim by a secondary claimant in respect of one of his or her qualifying children and make a claim for an SPCCC in respect of another child. Where a primary claimant has married, remarried or entered a cohabiting relationship, he or she is no longer entitled to the credit and therefore cannot relinquish it. As a result, no secondary claimant can claim that credit as it cannot be relinquished. In those circumstances, another claimant could only make a claim for the credit if he or she could prove that he or she was in fact the primary claimant because 1. The child resides with him or her for the greater part of the year, or 2. Custody is shared on foot of a court order, and A. The child resides with each parent for an equal part of the year, and B. The claimant is entitled to the child benefit in respect of the child. Paragraph 6. Secondary claimant. If a primary claimant relinquishes his or her claim to the SPCC for the tax year, the credit may be claimed by a secondary claimant, provided that a qualifying child of the primary claimant who has relinquished the credit resides with him or her for a period of 100 days or greater in a year. These do not have to be consecutive days. In addition, a day may be construed as the greater part of a day. Where a child resides with the claimant for a period, for example from Saturday morning to Sunday evening, that period can be treated as 2 days because the period comprises the greater part of each of the 2 days. Example 1. Mary and John are married but separated and have one child, Jimmy, who resides with John for the greater part of the year. John is the primary claimant, but he has relinquished his claim to the credit. Jimmy resides with Mary for 20 weekends in the year from Saturday morning until after 7 p.m. on Sunday. Mary also has Jimmy residing with her for different periods of 4, 3 and 2 weeks during the year. On each of these occasions he stays with her from Saturday to Saturday. During the year, Jimmy resides with Mary for 20 weekends, which is 40 days, 4 weeks is 29 days, 3 weeks 22 days, 2 weeks 15 days, a total of 106 days. Because John has relinquished his claim to the credit and Jimmy resides with Mary 100 days or greater in the year, Mary qualifies as a secondary claimant and is entitled to the credit. As was the case for a primary claimant, a secondary claimant is also only entitled to one credit irrespective of the number of qualifying children residing with him or her. Where a primary claimant has more than one qualifying child and relinquishes the SPCCC, there may be 2 or more secondary claimants if each of them can prove they have a qualifying child residing with him or her for not less than 100 days in the year. Example 2. Patricia has 2 qualifying children, Joe and Mark, who reside with her for most of the year, and in respect of whom she receives 1 credit. Both Joe and Mark reside with their respective fathers, John and Peter, for more than 100 days in the year. Patricia has no tax liability and wishes to relinquish her claim to the SPCCC. In this case, both John and Peter may qualify as secondary claimants, provided that neither is married, in a civil partnership, or cohabiting. Paragraph 7. Claiming back the credit after it has been relinquished. Where a primary claimant has relinquished his or her claim to the SPCCC for a year of assessment, he or she will have relinquished that claim in full for that year of assessment, regardless of any change in his or her circumstances during the year. The credit will remain relinquished for subsequent years of assessment until the primary claimant notifies Revenue that he or she no longer wishes to relinquish his or her claim to the credit via my inquiries. This action takes effect from the tax year following the year the notification is made. Therefore, the credit cannot be taken off the secondary claimant during a tax year in which he or she is availing of it, but only from the commencement of the next tax year following notification by the primary claimant. The SPCCC cannot be split between 2 claimants. Example 3. Joan is the primary claimant, but she has had no tax liability for a number of years. She relinquishes her claim to the SPCCC to a secondary claimant. During 2025, she returned to work and notified Revenue that she no longer wishes to relinquish her claim to the credit, as she would like to use the credit to reduce her tax liability. In such circumstances, she cannot get the benefit of the credit immediately as the secondary claimant retains the credit for 2025. Joan will, however, receive the credit for 2026. Before I proceed to paragraph 8, child in receipt of full-time instruction, please feel free to contact us at BPPM using the contact tab on this website address, or follow our community Facebook page Boyle Payroll Project Management for payroll, press releases, income tax and other PAYE and revenue updates, or subscribe to our channel Payroll Matters in Ireland if you have not already done so. www.bppm.ie is the website. Paragraph 8.1. What is full-time instruction? For the purposes of the SPCCC, full-time instruction includes all courses relating to primary degrees and diplomas in all public and private educational establishments where the qualifying child is in receipt of full-time instruction and the course of education is for 1 year or more. It also includes programs of training for any trade or profession, apprenticeships being undertaken by the qualifying child where the child is required to devote the whole of his or her time to the training for a period of not less than 2 years. It should be noted that full-time instruction does not include postgraduate and doctoral programs where the student is primarily involved in self-managed research and learning, which do not involve the provision of full-time instruction. If clarification is required on a full-time nature of any course, the Revenue Commissioners can consult with the Minister for Education and Youth. Paragraph 8.2. Qualifying child living away from home. Where a child is in receipt of full-time instruction necessitating living away from home during term time, they can be deemed to be resident with the claimant for the purpose of the credit. Paragraph 8.3. Qualifying child ceases receiving full-time instruction. If a child in receipt of full-time instruction ceases in school or college, the credit will continue to be granted for the remainder of that year but will not be due in subsequent years. The claimant is obliged to notify his or her Revenue Office of this change in circumstances and to withdraw the claim to the credit. It can be claimed again when or if the child resumes full-time education. Paragraph 9. Claims where the claimant's circumstances changed during the year. Section 9.1. Marriage, cohabitation or reconciliation during the year. Where a claimant marries, remarries or enters in a cohabiting relationship or reconciles with an estranged spouse or partner during the tax year when the claimant does not meet the conditions of Section 462B requirements for all claimants. However, the credit will remain in place for the year of marriage, commencement of cohabitation or reconciliation, and is only removed from the following tax year, where a primary claimant has married, remarried or entered a cohabiting relationship. He or she is no longer entitled to the credit and therefore cannot relinquish it. As a result, no secondary claimant can claim that credit as it cannot be relinquished. Paragraph 9.2. Loss of employment during the year. Where a claimant leaves employment, he or she can retain the credit for the rest of the year, either to use 1. in respect of any subsequent employment that might be taken up, or 2. against other taxable income, for example a pension entitlement, including any Department of Social Protection pension. Paragraph 9.3. Death. Where a claimant dies during the year, he or she retains the credit for that year, and the full credit will be granted in finalising his or her tax affairs to the date of death. A successor claimant in such circumstances will be entitled to make a claim for the tax credit from the following tax year where the qualifying criteria are satisfied. Paragraph 9.4. In the year of separation where a couple were jointly assessed for tax purposes, the non-assessable spouse or other civil partner, as the case may be entitled to the credit in respect of the post-separation period. This is subject to the claimant satisfying the qualifying conditions of Section 462B. That is, that he or she has a qualifying child residing with him or her as the single carer for more than 6 months of the year. As the assessable spouse or nominated civil partner retains his or her status of not being separated for the year of separation, the SPCCC would not be due for the year of separation. This is because you keep the married person's personal tax credit and rate band in the following year if he or she satisfies the requirements and has a qualifying child residing with him or her for the appropriate period. A claim may be made for that year. Paragraph 9.5. How to make a claim for the SPCCC. Paragraph 9.5.1. PAYE customers can make a claim in the current year using PAYE services in My Account as follows. 1. Sign into My Account. 2. Click on Manage your tax for the current year in PAYE services. 3. Select Add New Credits. 4. Select you and your family and single person child care credit to add it as a credit. 5. Click Next and then input the number of dependent children. 6. Input the child's name, date of birth and PPS number. 7. Input the name of the child's school or college. 8. Complete and submit the form. Revenue may request that a SPCC1 form be submitted in order to approve the claim. Self-assessed individuals can claim the tax credit by completing the single person child care credit section on their Form 11 annual tax return at the end of the year. A primary claimant can also make a claim for the SPCCC by completing Parts A and C of Form SPCC1 and submitting it to Revenue via My Account using My Inquiries. Where the qualifying conditions are met, the credit will be granted for that tax year. Paragraph 9.5.2. A secondary claimant can claim the SPCCC following relinquishment by the primary claimant by completing a Form SPCC2 and submitting it to Revenue via My Account using My Inquiries. Where the qualifying conditions are met, the credit will be granted for that year. All forms are available on www.revenue.ie. My final important message before I leave you for now, can I ask those of you that have not already done so to hit the like, follow or subscribe button depending on what platform you are watching this video guide on, as we have many more helpful pay, income tax and other work related guides and videos to bring you. It costs you nothing to like, follow or subscribe, but could help you save hundreds or even thousands of euro into your hand on pay and tax. Go on. Hit that like, follow or subscribe button. Go on. See you next time, and thank you for watching.